Copper just hit the 96th percentile. And copper at this level is a leading indicator of global industrial demand. Something is breaking beneath the surface and the data confirms it. Right now, 10-year yield is at 4.45%, the 94th percentile for the past year. Historically, the 10-year at this level reprices every leveraged asset in the economy. Snider says the eurodollar system is tightening and nobody sees it. The data says gold rose 3.6% today, moving against the bearish consensus. In the next few minutes, I will show you who the data says is right and what it means for your money this month. The commodity analyst has been right for 176 straight days. Here is the full scoreboard. The commodity analyst's commodity supercycle call is paying off. Oil at $84.9 and trending their direction. 176-day streak, Gammon's credit will blow out call is paying off. Yield curve at 0.39% and trending their direction. 3 days running, score 1 for Snider. Dollar liquidity crisis. Yield curve agrees at 0.39%. 3 days running, the volatility expert called it. Volatility expansion. VIX at 19.4 confirms it. Too early to call McElroy right or wrong. The thesis is building but not confirmed. 175-day streak. Too early to call Hartman right or wrong. The thesis is building but not confirmed. 169-day streak. The dollar analyst call is not working, for now. Gold moving against the bearish thesis, up 3.6%. 3 days running, score today. 4 right, 2 early, 1 wrong. A streak this long means the trend has legs, but long streaks end eventually, and when they do, the reversal is sharp. Today's big question, is the dollar about to surge, or is it topping out? Snider says, the eurodollar system is tightening and nobody sees it. That is the thesis driving the debate today. It sounds right on the podcast and it is a clean narrative. But here is the problem. Gold rose 3.6% today, moving against the bearish consensus. If the data is right and the speaker is wrong, positioning changes fast. Here is what makes this interesting. The dollar index is falling while gold is rising. Those two signals should not be going in opposite directions. When they diverge like this, one of them is lying, and the resolution is usually fast. The dollar index at 99.8, 90th percentile, down 0.1% today. Gold at $4,239, 49th percentile, up 3.6% today. Bitcoin at about $64,000, 5th percentile. Bottom line, the data is pushing back against Snider. Until the signals confirm, the thesis is early. If the dollar index breaks below 99, the milkshake theory loses its legs. Right now, it is at 99.8. If gold and Bitcoin both rally while the dollar holds, the liquidity thesis is wrong. The dollar index at 99.8 is in the 90th percentile, reversal territory. If it drops below the 75th, the thesis weakens fast. Gold at $4,239. We'll track it daily on the scoreboard. None of the 7 are talking about this next signal, and they should be. 10-year yield just dropped 2.2% to 4.45%. That's the 94th percentile. Extreme territory. Historically, the 10-year at this level reprices every leveraged asset in the economy. None of the 7 are talking about this. Keep it on your radar. Phase 1 is the good times. But good times do not last forever. Here's how close we are to the edge. We are 75 basis points away from Phase 2, the phase where credit breaks and volatility spikes. There is no acceleration in credit stress yet, but we are watching the pace, not just the level. The trigger, investment grade spread crossing 150 basis points, currently at 75 basis points. At this week's pace, that is roughly 75 weeks of runway, that is late November. Phase 1 means risk on is working. Equities, commodities, and real estate all benefit from loose conditions. Enjoy it while it lasts. For context, the last time credit stress built like this, credit spreads blew out and high-yield bonds saw drawdowns of 15%. The credit and rates layer has CFNAI, equity risk premium flashing red. Gammon says the Fed is breaking things and credit spreads will blow out. The data agrees with that assessment. Phase 1 holds with 75 basis points of buffer. Conditions favor risk, but do not get complacent. Wall Street trades the index. We trade the ground. Here is what the zip level data is screaming about today. Marin, CA, payment burden is past the breaking point. Bolinas, CA, median home about $1,915,000 on about $96,000 household income. Price to income ratio, 19.9. When the math stops working, sellers find out before buyers do. Delta County, CO, builders are pouring concrete where nobody can afford to buy. Delta County, CO permitted 115 units this year, up 117% year over year. Affordability score an 81,413, 25,100. Supply chasing demand that doesn't exist at these prices. Delta County, CO, builders are pouring concrete where nobody can afford to buy. Delta County, CO permitted 115 units this year, up 117% year over year, up 117% year over year. Affordability score an 81,419, 2,100. Supply chasing demand that doesn't exist at these prices. These are not hand-picked metros. They are the loudest signals in the housing data right now, chosen by the numbers, not the narrative. Today's debate asked, is the dollar about to surge or is it topping out? Let me show you what happened the last time we were here. Bitcoin at about $64,000 is in the 5th percentile. That means it is lower than 95 out of 100 days in the past year. In 2022, Bitcoin fell from 69,000 to 16,000 as the Fed tightened and crypto leverage unwound. In 2020, Bitcoin crashed 50% in March, then rallied 1,500% over 18 months. In 2018, Bitcoin dropped 84% from its peak as the speculative cycle ended. Different environments, different catalysts, but every time, the resolution came fast. The pattern is not the level, it is the speed of the move once it starts. Meanwhile, the dollar index at 99.8 is in the 90th percentile. The last time both Bitcoin and the dollar index were at these levels simultaneously, the resolution came within weeks. That is why the scoreboard matters. It tells you which speakers saw it coming and which ones missed it. If history rhymes, Snider should be paying close attention because the clock is ticking on this pattern. Here is what the data says to do right now. Stay alert on VIX. It is dropping 12.5% today. Fast moves demand attention. Avoid Phoenix at 41% payment burden. That is stretch territory. Watch 10-year yield. It dropped 2.2% and nobody is talking about it. 4 out of 7 speakers are right, the commodity analyst, Gammon, Snider, and the volatility expert. When this many align, the trend usually has legs. Every signal is live at analyze.builderslens.com. The podcasters give you the thesis. We give you the scoreboard. Subscribe and I will see you tomorrow morning.